Several years ago, I started this channel because I wanted to share my passion for trading and investing and finance in general. And it's been a love-hate relationship with YouTube in general. And I'm just not a YouTuber per se, but I do have some things to say about trading and investing in general. And lately, some of my friends have been asking me some advice and some basic knowledge about the stock market. And I realized that the vast majority of people um, are very foreign to the idea of investing and how it works and the general concepts that you need to uh, at least maybe not master, but you need to understand before you start investing your first dollar. So I'm going to make a series that is directed to my friends, and hopefully other people will benefit from the knowledge that I will share in the next few months. And so I'll make the series. This series is going to be called the Snowball Experiment. And the goal is for me to invest small but regular amounts of money into an account, and I will share the thought process, the charts, the numbers that help me make my decisions, and I'll try to share that with you guys, and hopefully you will learn something from it, or maybe you can direct someone that is starting towards this information, and maybe it will help them. So the first question someone needs to ask themselves is why? Why are you investing and what is your goal? Because if you're investing for retirement, you might need a different account type than someone that just wants to travel in 5 years or wants to go to college and things like that. So, depending on your country, you need to ask yourself the question, where do I invest the money? In what vehicle am I using in order to put that money in? And how far in the future do I need the money? For instance, I'm in Canada, so if I want to save for retirement, I might put it into an RRSP. If I want to travel, I might use a TFSA account, which is going to be tax-free, but when I get the money out, I don't get taxed on it. So this is something that you need to verify depending on your situation and your country. I can't really help you with that, but I just wanted to at least touch on this topic. The next important topic is your budget. You need to ask yourself, how much are you able to put aside in order to invest? And I think that one rule that needs to be respected is that once you start investing, you need to keep going and you need to pay yourself first, basically. So make sure that you take a piece of paper, you split it in two or an Excel file or something like that, and you put all your expenses on one side and all your income on the other one, and you make the difference and you figure out how much is left. Because if you're in a situation where you have a lot of debt, then you need to pay that first, and then whatever cuts you need to make on your expenditures. Maybe you can take a less expensive phone plan. Maybe you can cut on bad habits like cigarettes and smoking and partying and things like that. And maybe that's going to help you achieve some of your dreams earlier in life. And frankly, I wish I was more disciplined when I was in my 20s. I was chasing shortcuts in order to get rich quick. And I didn't understand the power of compounding. I knew about it, I understood it, but I didn't put it into application because I thought that my way would be quicker. I don't regret anything because I've learned a lot about the markets and about myself throughout that period. But if you're in your 20s, like a few of my friends are, You need to really question yourself about the good and bad habits that you have in your life, and discipline yourself to take that money and put it aside automatically and start to invest. And it doesn't really matter what you invest in as long as it makes sense and it has a history of going up over time, as long as you're consistent and you keep at it. The next thing I want to talk about is that once you've established how much you want to invest and how often and things like that, you need to choose a broker. And a lot of banks, for instance, they charge you enormous fees in order to manage your money. So I think that it's really important that you eventually move on from the banks that charge you 1.5, 2% a year just to manage your money on top of the fees they charge you by investing in the funds that they provide. And you move into what is called a discount broker. A discount broker is a broker which will not give you any advice. You will be on your own, but you will pay much less fees. You will pay fees, but much less than if you were dealing with a bank, for instance. If you're located in Canada, some options are Wealthsimple. There is also interactive brokers, but this one is a bit, you need to have a bigger account in order not to pay automatic fees, monthly fees, regardless of if you do some trading or not. And but they do have international stocks, so that's pretty good. Also, the one that I use the most is Questrade. I have like 5 accounts with them uh, because I have different strategies and different types of accounts as well. And I keep everything separated, and it's very easy for me to use. If you're in the US, you will have to look at other options like Vanguard or State Street, things like that. Regardless of your country, though, you need to ask certain questions. For instance, for me, I'm in Canada, so I trade a lot of US stocks. So I need to have a broker that has both Canadian dollars and US dollars within the same platform. I don't want to pay fees every time it gets converted from Canadian to American. So this is something that's important for me, so it might be for you as well. The other thing is the fees. If you're just getting started, you might be investing more into ETFs. So if you can find a broker that offers free trades on ETFs, you will save a lot on fees, especially if you're putting small amounts of money, like $50 or $100 a month. Then the fees will eat you up if you pay $5 each time you make a trade. So this is something that you need to consider as well. If you have bigger amounts that you can put towards investing, then it's less of a problem, but it's something you need to consider. The other thing is the conversion rate. How much are you paying to transfer, for instance, Canadian dollars to US dollar? For my part, I think Questrade is 1.5%, which is quite high, but there are ways around that. But I will teach you that into future videos. The next thing I want to touch on is the fact that you need to start small. I think it's important that you really put amounts that you're willing to lose in order to learn the process of investing. And I think it's important that you don't go all in on a certain area, like crypto, for instance. You need to really face yourself and never think that going all in is the way to go. You might get lucky once or twice, but eventually you will get bit. And I really think that diversification, especially if you're serious and you understand that you can get rich slowly, this is the best way in order to achieve success in the long run. You might have bad periods. Throughout history, the stock market has had periods of over 10 years, like a decade, where the stocks were doing basically nothing, but other areas were going well, like gold, or you could have invested in bonds and things like that. So we will go through history so that you can get an idea of what it is that you can expect from the market, especially with the situation right now where markets are at all-time highs and are overvalued. But at the same time, we're in a situation where the US dollar is being debased. So these are topics that we will explore in future videos as well. The next thing that I think needs to be talked about is to automate your deposits into your broker's account. Uh, Once you figure out what your budget is and which broker you will choose and what type of account you're going to open and what your goals are, then you need to automate the process. And the reason for this is that it forces you to pay yourself first. So the money is deposited, and then whatever you have money left is money you can do your other activities with. So it forces you to really prioritize investing in your life, and it's just a good habit to have. Next, we're going to talk about other little pieces of advice that I can give you that I think are crucial. And the first one is don't invest money that you need soon. You want to invest with at least like a 5-year window. I think around that is a pretty good number. For certain situations, like the one I'm going to do in the experiment, it's going to be maybe 2 or 3 years. I don't want to overdo it. And so I'm going to pick some easily achievable goals so that you can see the magic happening, but at the same time, I'm not forced to make videos for years and years. So the other thing is you need to determine your risk tolerance. You need to, by doing the investing, you will learn what makes you nervous, and you will see your emotions come to the surface. And as you go along, you will see what makes you sleep at night and what doesn't really quickly. So I think that you need to really pay attention to your emotions and how they make you feel. The other thing is we need to diversify the risk. So if you go all in on a certain thing, for instance, in the 70s, if you went all into the S&P 500, you would have made nothing basically for a 10-year period. But at the same time, if you would have invested in gold, you would have made over 1,000% return over the same period. So diversification is very crucial. The other thing is to stick to your plan. You want to really, once you're automated into your deposits, then you want to stick to the plan of investing and not pull the plug on it at the first obstacle. Then you just let the magic of compounding work for you, and you learn as you go. So the way I do it is I have various position sizes depending on the type of company that I'm invested in, depending on the price that I'm paying for it, depending on the dividend at that time. All kinds of reasons make me adjust the size of my position. And you will learn that as you go, and there is no better teacher than experience. And the last thing that I want to touch on regarding this little presentation is that you need to accept that you will be humbled by the markets more often than not. So most people think they can beat the market. Very few people can. So we will look at the performance of fund managers, and we will look at the performance of some indices, index funds and ETFs and things like that. These are very known facts in the finance world, but it's something that you need to put into your brain, that the main positions that you have should be, in my opinion, into core assets that have stood the test of time. So my goal will be to, in the experiment, is going to be investing regular amounts, like I was saying. I'll send some money every week. I'll set a minimum amount. I don't know exactly how much yet. Maybe something around $300 a week or $1,200 a month. And if I see better opportunities and if I see a reason to invest more, I will. but I'll try to show that with small amounts, you will compound money really quickly and you will build a base from which you can attack the markets. For my goals for this experiment, I will go into more another area that I haven't explored as much, which is covered calls. I've invested a lot into dividend stocks in the past, but not so much in covered calls. So I will start exploring that world and show you how I will navigate this and learn from my mistakes, and hopefully you as well. So none of this will be financial advice, of course. It's going to be me trying to familiarize myself with a new area of finance. Even after I've been investing for decades, I still learn new things about the markets, and new instruments come out every week. So, so it's really humbling in that sense that you can still learn new things. And the approach I'm going to do, like the goal I'm going to make is I'll try to build an account which will pay for a yearly trip into an all-included 5-star hotel. So my goal is to make I done some I googled the amount I need for that, and it's about $4,000 around that for a 5-star. I'm sure I can get a better deal if I look a bit, but traveling is not something that I've allowed myself to do over the years. I've always found that it was like a waste of money, but I think I'm wrong on that sense. So I'm going to try to force myself to travel a bit more and see this account, which I just started, as a that has a purpose of making me travel year after year. So if that's something that you are interested in watching in action from week to month, then I invite you to subscribe to the channel and follow the journey as I show some of my friends how I would invest in today's markets. I will share some insights about things other than the covered call ETFs, of course. But my main goal will be to build an account that has a yield of at least 10% in dividends, while not losing too much NAV, which is the net asset value, which is the total value of the portfolio, if you will. I want it to be relatively stable while giving me some regular income that keeps a stability over time and hopefully increases as well over time, so that I can get nicer and nicer hotels.